Hey everyone, it's Matt Williams from JTM Williams Capital Management. It's after the close on Tuesday, August the 11th. I'm doing this as a midweek market update, just to update everybody on the changes here in the market here since I did my last video. Again, just as a reminder, any of the indexes or securities I go over or are purely for illustrative purposes only. Again, please refer to the disclosures at the beginning and end of this video. This is for educational purposes only. Let me go ahead and just share my screen. All right. So, as we can see here, since the last video, the S&P had a very nice 1 week rally. We seem to be consolidating here in a pretty tight formation here after this breakout. If I had to just give two support and resistance, excuse me, support levels, one's going to be right here around, just call it around 7,600. So we've got the breakout from the previous all-time high, this gap support, and then I'd say bigger support down here around, call it 7,250, somewhere between there and 7,200. I think if we managed to break beneath this level and this level, that would give credence to this being a failed breakout, which would highly concern me. Now, having said that, I don't see anything, at least as of right now, it's leading me to think that's the most likely outcome. Let me go through and we'll just review here what some of the sectors have done here in the last week. Again, we're doing this here after the close on Tuesday, August the 11th. Energy's had a good week. We had some more skirmishes in the Middle East causing crude oil prices to rise. At least here I'd say in the last week you've had a little bit of a rotation out of the defensive trade. Um, the tech stocks and some other things seem to be holding serve as far as the S&P again, just going sideways here in the last 5 trading days. Um, again, I think just going back over this again, as long as I think we hold this level, this pretty good consolidations is healthy, warranted. How much of a rally we had going? Let's say look at the Nasdaq 100. This again on a relative basis is a little bit weaker than I'd like. Um, I think that here though, if we look, it tends to seem that we've potentially broken out of this downtrend, what could potentially be a flag pattern. This would you know, lead me to believe as long as we can hold here over this level, we might retest this and head higher. Then I think that the Nasdaq could be set up for a another uh, up move here after this consolidation. Um, One thing I wanted to go over here as far as showing this defensive trade again. Here is there has been some steam here since the market bottom. The defensives are going down, which again, that's something I typically would like to see. You want to see the offensive parts of the market leading the market higher in any advance. And if again, uh, you know, uh, funds or money rotates out of the defensive trade, I think that's good for showing a further advance. Um, we can just take a look at the momentum trade again. Uh, Semiconductors still, to me, look like they're in a bit of a short-term down move. Uh, South Korea, same. The memory trade, the DRAM stocks still making lower highs and lower lows. Now they're at least trying to dig out of here. So we'll see. I'd like for it to see it break this level here to the upside to make me a little bit more, optimistic that we could go and retake former highs. Um, Look again, the semiconductors. Same thing. I'd still like to see the semiconductors here measured by the stocks break this 560 level on the upside. Give me a little more confidence. This down move is completely over. Uh, Now one thing I wanted to show everybody here is that normally, at least as far as things that I'm looking at that gives me a little bit more a positive view here of the market is the VIX, the volatility index, continues here to make lower lows here as the market's making higher highs. Which again, what gets me a little bit more concerned is you can see here that typically the VIX spikes when the market sells off. We can see here in early 2025 when we had the tariff tantrum, the VIX got all the way up above 60. Here back in March, the VIX got above 35. Now again, it ended up putting in a nice positive divergence where while the S&P made a lower low, the VIX also made a lower high. Um, that's normally what you want to see. What you don't want to see is, and at least what gets me concerned, is that when you start seeing the VIX make higher lows while the market's making higher highs, to me, that's an early warning signal that options traders are thinking we're about to have a bumpy road or heightened volatility sometime in the not too distant future. So again, as we can see here, um, here when the market was making higher highs before the tariff tantrum, the VIX was actually making higher lows, and then obviously ended up spiking. We had a pretty considerable down move. Same thing here, year before March. Markets making higher highs. The VIX actually bottomed here back around Christmas and kept making higher lows. Now, again, we didn't have as precipitous of a decline as we had here last spring, but still, though, this did give you early warning signal. And right now, you're just not seeing that. Again, the VIX, volatility index is making uh, lower lows. I'm going to flip this just to make it a little bit easier, for people to see. So this ETF is the short VIX futures. What it does is it's the inverse of the VIX. It shorts the short-term volatility future. So again, if this is going down, that means that the VIX is going up. And again, as we can see here, both these times, making lower highs. Here's higher highs. Here again, lower highs, higher highs. In both cases, it was giving you a little bit of an early warning signal, that we may be in the mood, excuse me, maybe about to experience a downdraft. And again, right now, this is making higher highs. This is making higher highs. So again, right now, until I see a type of negative divergence, I'm still thinking the volatility market is supportive of higher equity prices. Also, if we move here, let's just look at the advanced decline line. This is just the cumulative number of stocks going up minus stocks going down on a cumulative daily basis, and it again made a new all-time high here today. If you look again, we'll go back, look, equal weight made a new high here this week. S&P value, made a new intraday all-time high here today. So again, I think right now you're just continuing to have healthy rotation. What could upset that? Oil can continue going higher. More hostilities in the Middle East. What that also tends to be doing is pushing up interest rates. I think if the 10-year yield and longer term interest rates continue to get disorderly to the upside, that could end up, potentially causing some problems for the market. The other thing also, just the Treasury trying to intervene in the Japanese yen. As you can see, that's what caused this big spike here. Now, some of it's being given back. What that is that the U.S. Treasury was selling euros to buy yen to prop up the currency. We're also doing that supposedly to keep the Bank of Japan from selling or dumping our treasuries in the open market to prop up their own currency. There's also been some discussions of potentially the Treasury may or may not be printing U.S. dollars to buy those treasuries back from the BOJ again, so they don't dump them in the open market, causing interest rates to go higher. So again, while there's some things out there that could always end up, derailing the rally at this point, semiconductors continuing to unwind, the AI momentum trade unwinding, more of a, again, disorderly decline in South Korean stocks from that, bubble that may have potentially popped, oil going up, interest rates going up. Again, while there seems to be, again, there's always a list of things that could end up derailing the market. At least right now, like as I was mentioning earlier, Brexit continuing to improve, the advanced decline lines going higher. The VIX at least right now is confirming the higher highs made by the S&P. So again, we'll continue to monitor this, and things can change tomorrow. They can change next week. And as always, I reserve my right to change my mind, depending on the prevailing trends. So let me stop the sharing the screen. And again, if anybody wants to contact me, please do matt@jtmwilliams.com. Happy to field any questions if anybody has any questions about anything we went over today. Again, I can be reached at matt@jtmwilliams.com. Please like and subscribe this video. I hope everybody has a great rest of the week, and looking forward to hearing from you. Until next time.